and updates from the market from last week. So last week was a little bit of a shorter week. So we had 446 criteria changes, with the majority of them being positive moves. So that was down from 1,032 the previous week. It was a little bit quieter with regards to criteria changes, but obviously it was a 4-day week as well. So I think that came into play, and the weather was nice as well. We had a few. We had the Masthaven Bank brands that re-entered the market last week, which was fantastic. And we've just seen, in general, sort of improved offerings from specialist lenders, which is really, really encouraging. More specialist lenders and building societies adopting AVMs and desktop valuations. And we did see some new criteria launched around furloughed workers, contract workers, and self-employed. So that was quite interesting. Now, I'll come on to that shortly, because we did see a couple of interesting trends that I think we probably just need to watch out for and make a note of. So just going through a couple of the sort of key highlights from last week. So Barclays reinstated buy-to-let mortgages, and that was up to 75% loan to value. Help to Buy, and that included London and Scotland in that as well. Also product transfers and further advances up to 80% loan to value. So that's a really good offering there then from Barclays. Leeds Building Society, they clarified their stance on furloughed workers and key workers with variable income on 0 hours contracts. So they're going to accept, like a lot of them do, 80% of the basic income up to £2,500 or £30,000 gross overall. And for cases where the employer will be funding either part or all of the difference, up to 100%, they will be considered on a case-by-case basis. So you'll need to provide evidence for that. But they're not accepting bonus, overtime or commission. So that's just one thing to be aware of there. So Skipton Building Society, they updated their criteria with regards to independent contractors and those on 0 hours contracts. So 0 hours contracts now, they so it depends, they're talking about the key workers and what have you. So it's 0 hours contracts. It really does depend on exactly what the job is. So if it's something in, for example, healthcare, then that's less of an issue to them. Teachers Building Society, they launched their digital valuations process up to 80% loan to value. So we're seeing a lot with the building societies, really going for it with regards to desktop valuations, which is fantastic. And some of them leading the way. I mean, we did see a couple, didn't we, up to 90% the other week. So teachers are going up to 80% for properties up to £1 million and 60% loan to value. And these are properties between £1 million and 1.5 million. But like a lot of the the desktop valuations and AVMs, they're not available on new build, and they're not doing them for buy-to-let either. Newbury Building Society, they now accept AVMs and desktop valuations, and so on purchase and remortgage, and buy-to-let, they'll go up to 95% on shared ownership. Which is great, because obviously, as we talked about the other week, new builds are still relatively strong and will be following yesterday's announcement, and the stuff that we already knew. We talked the other week about Taylor Wimpey, Redrow, Persimmon all going back on site and opening their site offices as well for sales. So we've got Mansfield Building Society that will lend 75% on resi and buy-to-let, which is 70% on buy-to-let, and 75% on residential. So just going a bit more into the specialist market. So Precise have now put in place AVMs for both bridging and second charges, and they brought out new ranges of products for these. So they'll lend up to 50% loan to value on bridging with a max loan of $275,000, and that's available on both regulated and non-regulated bridging and limited company applications. Second charges, Precise will go to 50% and a maximum loan of £200,000. with loans available for like literally any purpose. So that's great. And then we've got InterBay as well. So InterBay Commercial relaunched with buy-to-let of 70% loan to value up to £700,000 and semi-commercial to 60% and up to 60 £600,000. And then we also have Kent Reliance that have extended their product range to use AVMs to enable those to go through quicker on both purchases and remortgages for residential and buy-to-let up to 70% loan to value. They've also increased their maximum property value from 750,000 to 750,000. They do have a minimum property value as well, which is 75,000, which I appreciate that doesn't affect many areas in the country these days. So next one up, Masthaven Bank. They've increased their loan size for residential mortgages and second charges. So this is in order to benefit from an AVM. So it's £350,000 for residential mortgages and £150,000 for second charge residential. But bear in mind that's not available on second charge buy-to-let. So that is just on residential. So then we have Kensington. They've increased their LTV to 75% loan to value using desktop valuations, and that is for residential and buy-to-let. Now, Skipton Building Society, Skipton Intermediaries, they actually removed their residential product at 90% loan to value. Now, they were one of the first to use the automated model and keep that at 90% loan to value, but unfortunately I think they've been swamped with applications, so that's the reason that they closed that off. Having said that, that is just on that particular product, just on the fixed rate. They do still have a 90% loan to value 2-year discounted product. So if you wanted to still utilise that, you could, but it's on the discounted product. Now that is being monitored, but that is still currently available as we speak. And then Furnace Building Society desktop valuations are now accepted to 75% loan to value on residential with a maximum loan of £500,000. They've also got some new criteria there around self-employed and furloughed workers. Pretty similar to what everybody else is doing. So the bonus over time will only be considered for key workers, which I think is pretty consistent with everyone else's approach really in that respect. So moving on to our good news story. So this was really interesting. So last week we saw an industry group that was comprised of a Mortgage Advice Bureau, Landmark and Simplify, and they have been they put a policy together that they want the Ministry of Housing, Communities and Local Government to look at, and they've actually got that in front of Robert Jenrick, who's the Housing Minister. And what they're wanting to do is put in a 4-step plan and just to try and get things moving again. So the 4 steps are defining what a safe move consists of and allowing the sector to be one of the first to reopen. The second point is making sure that lenders, where possible, honour mortgage offers where the transaction has yet to be completed. I think that's an easier one, and we've already seen a lot of movement on that recently. And providing a market-wide fiscal stimulus. Again, we talked about the housing market being the backbone of the economy with, builders, joiners, plumbers, plasterers and all of that, the different trades getting back to work. And then, of course, the retail side of things, everybody buying things for their house, it's massive, not to mention our market as well. And then the fourth point was extending the coronavirus job retention scheme for businesses operating in the home moving process beyond the restart of the market. Now, we've already seen that the job retention scheme for furloughed workers has been extended in the leisure industry, so bars, restaurants, that kind of thing. But whether that will happen in our industry, I'm not really sure, but they have proposed that. Now, we don't know any more about that at the minute, but what we will do is bring you more as we get any updates. And finally, a good news story. Well, it was us that we were making headlines last week. So we have gone live with a full integration with AirSource, the multi-award-winning later life the sourcing system. So now Knowledge Bank users can add air sourcing absolutely free of charge, and it's a full integrated product and criteria together for all of later life lending. They do have a webinar on this morning at 11 o'clock, but if you missed that, there are other ones that are available as well. So take a look at that. It's you can use it free of charge, completely free of charge. AirSourcing is a brilliant system, and products and criteria are both entirely integrated. So it really is a first of its kind. It's not in test. It's being rolled out, and absolutely everybody who has a login can use it. So so if you are doing later life lending, then definitely check that out. So that's that from me this week. So bits of a whistle-stop tour. So I did say there weren't many criteria changes, but there turned out to be quite some really key ones in there. So I'm going to hand over now to Jo, who's going to give you an update on some real-life cases and a bit of a view from the specialist market. So over to you, Jo.
Yeah, I was actually going to open up with that, the fact that you said there wasn't much going on, but it seemed like a jam-packed 4-day week, that one, does, Nick? So thanks very much for that. Loads of positive there, which is amazing to hear. Right, so all things specialist and packagery. We again just, we inundated with lenders sort of coming back and tweaking criteria, and we're definitely seeing the handbrake, particularly on the pipelines, for specialist lenders sort of being taken off, and those cases starting to move again, and we're gradually getting more and more momentum, which is exciting to see. I think we've got some semi-exclusive product launches coming our way in the next couple of weeks, so hopefully I'll be able to announce those on next week's call, which will be absolutely fascinating for you guys, because they're really, really good, particularly for the expat and overseas borrower community. So in terms of new biz, I think one thing for me, one deal that stood out from our team last week was we actually managed to place a land without planning inquiry, which is the first time since lockdown that we've been able to do so. Decent developers are land banking left, right, and centre, and unfortunately, this drama has left those guys with nowhere to go, because lending appetite for land without planning just dropped off the face of the earth. But last week, thankfully, Devon and Cornwall came to the rescue of one of our broker clients, and gave us terms on a 65% LTV land purchase in the southwest, which was great to hear. Completed biz. And I'll come back to this in a bit, but we're definitely seeing an increase in inquiries relating to debt console. And the best bit of completed biz that we nailed last week was on a secured loan, which we did with Optimum Credit, second charge, 52k loan for debt call, 6.6%. Again, I think considering where we're at valuation-wise and less of a reliance on income types, I think to get away a debt console deal on a second charge basis is absolutely fabulous from the guys at Optimum. We're really proud of that. I think the first charge market have sort of stepped away from the debt console arena, but they must have done, judging by the increase in demand that we're seeing on those sort of applications. So for those guys to still honour that and complete that case was absolutely fabulous for us. Hero Lender of the Week, again, One Savings Bank. I won't go over it too much because Nick's covered off all the poignant points, but the fact that all brands are back up firing now, InterBay on the semicom side, the back in the seconds arena, I think One Savings Bank leading the charge and coming back into the arena, I think is great news for us all, because they're such a key player in the specialist market, and particularly for us with our exclusive and semi-exclusive products with those guys. So it's a well done there for OSB. Valuer Watch. So every week I've been given a bit of an update on physical valuations that are going out. So not desktops and drive-bys or AVMs, literally physical valuations. And obviously being a 4-day week, we had less days to go out, but we actually got 7 valuers out onto sites and vacant units last week. So there is still some activity from the valuer world. So again, if you're struggling, you really need an urgent valuer to go out, speak to a specialist distributor such as ourselves, and see what options we've got out there for your customers. Again, I just want to wrap up with a bit of a mortgage trend that we're seeing on the new inquiry side, and that's definitely on the debt console. We've definitely seen a rise in second charge for debt console inquiries, and particularly, we've actually seen a lot of unencumbered buy-to-lets that professional landlords have got, and they want to use those to debt console some personal debts and roll that into their property portfolio. So keep an eye out for those sort of applications. Again, we can help out with that, whether it's short-term or long-term, depending on what they're going to do with with that investment property. But debt console distributors can help. That's me done for this week.
just unmuting myself. Right, okay. So if anyone's got any questions, we're happy to take those now. I think one thing, I think you're absolutely right, Jo, and on the other side, we did see some interesting things from both NatWest and from Accord last week around debt consolidation, and saying that wasn't something that they were happy to accept when they've been on payment holidays. So, and obviously some rules around furloughed workers. So I do think debt consolidation in the mainstream is going to getting a little bit more difficult. And if you think this is perhaps when people have got time, they're at home, they're looking at restructuring their finances, they're looking at everything, and then so this is perhaps going to be something that we do look to the specialist market for, while mainstream lenders are perhaps just backing away slightly. We'll have to watch and see how that develops. But yeah, that's a really good point on DebtCon.
Yeah, agreed. And it's just thinking outside the box at the moment. A customer comes to you thinking they want to roll that into their first or get a further advance. Always consider a second. Absolutely amazing terms out there in the seconds market relative to the debt, quantum. And when I say thinking outside the box, look at what their assets they've got. As long as they've got property, on their shores, the specialist market can look at it. So as long as it leaves the customer in a better position than they were in prior, and income is reliable and plausible, you can find a home for it. So it's good to hear that there's a bit of opportunity there still.
Yeah, definitely. And I think that is something that the specialist market will see more inquiries around, as certainly if NatWest and Accord have gone that way, then we might expect to see some more this week. I mean, obviously we're just on Monday morning, but and we'll report on that next week. But usually you see trends and they start as a ripple and then they do sort of go across.
Domino effect.
Yeah, absolutely.
Well, great. I think we've obviously done such a good job. We've got no questions this week, so we'll let everyone crack on and hopefully feel energised and generate some biz.
Brilliant. Thanks, everyone. Thanks, Jo.
All right, guys. Take care. See you next week.
Bye.
Bye.